Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're covering a budget proposal to tax electronic digital products and services and the questions this proposal raises. Spiedel's summer tax webinar brings together the topics our customers consistently ask for so you get the information that's most relevant to your practice. This year we're covering using AI in your tax practice, S-corporation and partnership basis, stock incentives, and estate planning. For details and to register, go to spiedel.com and click webinars. Although California is coming a little late to the game in proposing to expand its sales and use tax base to cover the sale of digital pre-written software products and software as services, if enacted, Governor Newsom's budget proposal to begin taxing these products and services would commit California in a big way. According to the Legislative Analyst's Office, if enacted, the proposal could result in the imposition of over $2 billion in additional taxes per year and would be imposed against both businesses and direct consumers. As the economy has shifted away from a tangible personal property base, it's not surprising that California, as well as the majority of other states, including New York, Texas, and Washington, are moving to tax software delivered electronically. If enacted, California would tax these purchases of software whether they're purchased directly on a disk, delivered electronically, such as through downloads, as part of embedded software in various goods, such as computers, coffee pots, etc., or as a service delivered over the cloud, also known as software as a service, for example, Zoom, Dropbox, Slack, etc. Unlike a lot of other states that tax software delivered electronically, the governor's proposal would exempt a lot of direct consumer purchases such as downloads of music, ebooks, video games, or video delivered through apps like Netflix or Hulu. Instead, the governor's approach focuses more on purchases made by businesses. Examples include customer tracking software like Salesforce, payroll and human resource software management services, and most importantly for our industry, tax preparation and financial planning software. To date, no legislation has been officially introduced, although draft language of taxation of digital pre-written software is available on the California Department of Finance's Trailer Bill language webpage under the heading Forecasting. If enacted as proposed, it would be effective beginning January 1st, 2027. Many lobbyists are warning businesses to begin evaluating their software usage now and prepare themselves for a 7.25% to 11.25% increase in their purchase costs to cover the additional state and local sales and use taxes that they may have to pay if this proposal is enacted. Needless to say, this proposal raises a lot of questions. First, which services and products would be covered? There are proposed exemptions for sales for resale, purchases for interstate commerce or for use outside of California, and digital products that represent a personal or professional service provided in electronic form if the service primarily involves the application of human effort by the service provider, and the effort starts after the service is requested. Presumably, this would cover tax returns delivered electronically that are prepared by a tax professional, as opposed to a software provider such as TurboTax, but the devil will be in the details if the proposal is enacted and regulations are adopted. Another question is, how will the sales and use taxes be sourced if a business has multiple locations? It's unclear how these purchases would be sourced if made by businesses that have employees using the software in different locations, both inside and outside California. Also unknown is whether they would be taxed at the time of the purchase or licensing, or only after they're actually used. Who's responsible for ensuring that the sourcing rules are applied correctly, the retailer or the purchaser? As currently proposed, the purchaser, rather than the retailer, would be required to pay the tax on large purchases, such as those involving a purchase of $5 million or more. Waivers may apply under certain circumstances. And another question is, given everything else that's going on in the economy, is this the right time? At this point, it's unclear whether the proposal will actually be enacted, and if so, when and in what form. If you or your clients have questions or concerns, it's important for you to start talking with your legislators now because the June 15th budget deadline is quickly approaching. We'll provide updates on this proposal as additional details become available. You can stay up to date with state tax news, such as this issue, with a subscription to Spiedel's California Tax Letter. You can get subscription details and download a sample issue at Spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.